Hello, Adam. Thank you for having me here. Yeah, so I can start with the team background of Water Valley. Yeah, so the two founders of Water Valley actually, initially working for, SG Societe Generale back from 2005. So they have been working together for 18 years. So they worked 4 years at Societe Generale, then they move on to Millennium for another 4 years, then start Water Valley 2013. So this is already the 10th year, 11th year of Water Valley as well. So basically we do more volatility kind of trading. The team started doing the option volatility arbitrage strategy, then gradually added, equity. Then 2016, we added a commodity, cross-border arbitrage into our portfolio. So I think probably this is what you want to focus on, regarding our commodity and equity strategy. So
Yeah, absolutely, Tom. That would be great. Because anything you could tell people about the fund and the basic strategies of the fund would be fantastic.
okay, sure. So the reason we added, the commodity strategy into the portfolio is actually because inside China, starting from 2016, we are seeing actually there's commodities actually picking up and the volatility actually be increasing. Compare with the equity, there was a big crash in China 2015. From 6,000 to 3,000, that's a big job. And so far, they haven't recovered. So China equity market is still around 3,000 level, even after, 8 years now. But actually, on the other side, commodities is more active. And we are noticing, especially since, the past 2 years, actually since the end of year 2021, we notice actually the commodity strategy volatility is getting higher and higher, compared with before. The reason is because, there's macro reasons behind that. First of all, the Federal Reserve interest rate is much higher compared with before, from zero, interest rate environment to 5.5%. That changed significantly the landscape. So after they raised interest rates aggressively, in mid 2022, we are noticing, the commodity market is reacting more and more violently, to any Federal Reserve decision. Even nowadays, they actually keeping the rates for stable for the past 3 meetings, but that doesn't matter because anytime they change their or they pivot their position, you're noticing the commodity volatility, copper, gold, or crude oil, everything actually moves, a lot around, their Federal Reserve decisions. Yeah, so that is one reason why we are seeing the volatility in terms of the commodity spread. Let me, describe our, strategy a little bit. We call it cross-border arbitrage strategy. So basically, we are trading the same commodity listed on different exchanges, mostly one leg inside China, one leg outside China. For example, for gold, we trade the China gold versus US gold. For crude oil, the China crude oil versus London Brent crude oil. Yeah, for copper, it's a little complicated. We trade three leg. We can trade China versus London and also versus CME gold, CME copper. In New York City, so it's like a tri-city play. So I just mentioned one reason why the volatility is picking up compared with before is the Federal Reserve interest rate. The second reason is actually the geopolitical reason. So we are noticing not just the China-US competition, because that's has been there for almost 8 years now, since 2018 when Trump, took office, really getting more and more, intense, right? But even for like a Middle East conflict, this mostly happened in the past 2 years, since last year, it's getting more and more intensified, right? Yeah, so this actually caused more volatility in crude oil and other markets as well, because the whole geopolitical tensions actually caused the both copper, crude oil, all these metals actually move very quickly around when there's a big things happening, not just in the US or in China, even in Middle East, you're noticing, the commodity price just change very fast now. Yeah, so that didn't happen before. Believe me, before, year 2022, that's the Biden year, right? Then year 2018, when Trump took office, those things are actually not that active. But nowadays, you are seeing that happening almost on a weekly basis. Let's not talk about monthly basis. We are noticing the commodity spread are changing very fast these days. So that explains why, our performance are picking up in the past 2 years. So we have been trading commodity strategy since 2016, right? So this is already the 9th year of this strategy. But still, the best 2 years of the past 2 years, the year 2022 and 2023, we are seeing the best performance in our track record. Year 2022 is 15%. Year 2023 is 20%. For arbitrage strategy to give investor net return around 15 to 20% is actually very high, compared with before. Before we have only around like 9% kind of return. Now it's double digit and also, in approaching 20% in average. Yeah, so that is the reason why, we are actually seeing this strategy, performing better compared with before. And also looking ahead, we believe, first of all, we probably will see in the Federal Reserve interest rate to be hanging around, I wouldn't say 5%, maybe 3, to 4% for quite a long time. So we can't, predict it will come back to 0% anytime soon. I think it will take really a long time for them. Maybe only like some real bad event happens, and they will probably drop interest rates that fast. Otherwise, they will, if the inflation sustains, the interest rate will also stay high for a long time. And secondly, I think the geopolitical tensions are still there. It's actually very hard to imagine, China and the US normalized situation. I'm not saying like going back to honeymoon. That's almost impossible now. Just normalize. For example, the US president should visit China, right? Because in the past 4 years, it didn't happen. That's the first time ever in the US president since, Nixon didn't really visit Beijing, right? So I think, probably that will be normalizing, in the next 4 years or something. But still, the competition will actually still be intensive. Yeah, so we are not seeing any, lessening effect of this kind of volatility. So we believe looking ahead, the next, 4 years, 5 years, even though you have a new president, it's still the same as before, right? Either Trump or Biden. So didn't have much change. So I think the macro environment will pretty much stay the same, during the next 5 years. So we are actually believe, this strategy should have another 5 years to go. And then after that, we don't know, because we don't know who's going to be the next US president, right? Yeah, so we can only see in the next 5 years should be okay for this strategy.
Well, that's a key point as well, because you are mentioning that you're trading the volatility, right? Because a lot of people might think, well, your fund depends on the commodity performance, but that's not the case, right? Because in 2023, for example, commodities had, not a great year, right? 2022, obviously, they had a good year because of Russia and Ukraine, and that pushed up commodities. But 2023, I think in general, oil went down and many commodities went down, right? So actually, your fund did well, because that's the key point. You're trading the volatility. You're not just buying and holding commodities, right?
That's right. So we are not correlated to the actually, I can't find the real, asset class that is correlated to our performance, because year, 23, 22, you can see these 2 years are very different, right? If it's a CTA commodity index fund, they probably will do pretty well 2022, but 23, as you say, it's actually not that a good year for the CTA fund. So actually, we are very exceptional in terms of our own logic. Yeah, because the logic for our cross-border arbitrage is actually a mean reversion logic. So we got in when the spread is like widened, to like close to a certain level, sometimes historical level, right? So we got in, then wait until the spread revert to the mean, like not just average. And when we talk about mean, we mean, the fair pricing. The mean price is the fair pricing of this spread. So we wait until that reversion happens. So that logic is very different from the directional bet. Sometimes it's actually the opposite way. For example, May, the past months, it's actually a difficult month for me. Believe me, because the copper price, if you notice the copper price directional wise, it's rising very fast, but the spread just went haywire, especially the US copper and both the US copper went apart like 10% against both the London copper and the Shanghai copper. So that caused some problem for us because it's just way beyond the historical level. The previous historical level is like 6%, but this time it went around 12%, almost double the historical level. So we have to cut loss. So we end up May around 2.7% loss. That's probably already our largest drawdown since year 2020. That's another pandemic year. When pandemic happened, you have that kind of historical spread as well. But still, we end up 2020 positive, and we also believe this year will also be positive. 2.2%, 7%. It's just took away some of our gains in the first 4 months. We are still positive so far this year, but not much, like around 1.1%, because that 2.7% basically took away our performance in the previous 4 months. Yeah, so that is, I would say, some why we have a drawdown is usually caused by some big movements of the spread. For example, this time it's because of the squeezing happening in the New York copper July contract. They actually went against both London and the Shanghai market way apart. Usually the spread is like only 2 or 3% before, between London, New York, and Shanghai, usually just around that range. Even historical range is around 6%. That happened during the Russian-Ukrainian war, when there was panic, right? Because there's a war going on. Then New York rose much faster compared with Shanghai and London, but still it's 6%. But this time, 10 to 12%, and there's no war, no famine, right? So no pandemic, right? Nothing. So that is why it's a squeezing event. It's basically just some, big guys, they want to push up the market, try to squeeze the physical guys. So, but that happened in the futures market. Like the last time it happened is around almost 30 years ago. In copper, the last squeezing happened in year 1996. When the Japanese trading house tried to push up the copper market. Then it happened again. But as I say, it's almost 30 years ago. Yeah. So those things happen, but we will have some drawdown from these kind of events, but that's controllable, usually less than 5% kind of drawdown. And that happen fairly rarely, usually every 5 years or even longer period, depending on which commodity you're talking about, right? So I think that's kind of what I'm talking about. There's some, why we will have some drawdown is usually caused by this large macro events, either war or, pandemic or some squeezing happening in the market. Yeah. So then our good years are normal years. For example, last year is actually a very good year for us. Year 2022, the same thing. The reason why, because if in a normal years, you have volatility, right? But that's controllable kind of volatility. Year 2022, you actually have Russian-Ukrainian war, but even the war didn't cause much damage to us because it's actually fairly, in terms of market behavior, still fairly stable. Yeah. So usually in those years, we have like a double digit or even close to 20% kind of return. So in a normal, but I say even you talk about normal years, every year is you have something going on every year, right? So what I'm saying is those very rare events like pandemic is certainly once in 100 years. Then you have this copper squeezing once in 30 years. These events really can cause some problem for us. But still, looking back into history, even with that kind of extreme events, we still end up positive year every year for the past 10 years.
Fantastic. And just a final question for me then. So right now, when it comes to volatility, I mean, what are you seeing in the market? I mean, apart from the same things as always, like the US-China tensions, and
Yes.
maybe the issues with, Iran and Israel and so on. Are there any other events you're seeing right now that are kind of causing some volatility in the market that your fund could potentially exploit?
Yeah, so we are seeing, actually the volatility is very intensive, in terms not just as you mentioned, the geopolitical and also Federal Reserve, even for normal trading, scenario. For example, when OPEC say cut oil outputs or raise outputs, right? They are always changing that almost every year, based on the oil price, right? So even for those kind of events, actually can cause a lot of volatility. For example, April, last year, April 2023, right? So when Saudi Arabia decided to cut OPEC, output, actually those caused a lot of surprise, movement in the U.S. market because U.S. wasn't prepared, but the China crude oil really didn't follow that much. So it gives us good opportunity to arbitrage during that month. So that's one of the good months for us. So any kind of these kind of events can also cause, volatility in these commodity exchanges. So you are noticing China and the US almost reacting differently almost on everything now. The same thing happening to the China commodity and the US commodity. They have different opinion, different ideas regarding, OPEC decision, all these things. Yeah. So we are noticing all these things are causing more and more volatility.
Fantastic. Well, thanks a lot for joining us, Tom. And if anyone has any questions, just reach out to me and I'd be more than happy to answer your questions.
Okay. Thank you.